Good afternoon, everyone. This is Christian with PerfectStockAlertcom, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, September the 6th, 2013. We're looking at a few various different markets going on the globe. And again, all my charts are kept on the free website at PerfectStockAlertcom, so you can check out whatever chart you'd like there. I've notated them all and I update them nightly. Today, like I said, we're going to cover a couple of them. And it's basically just the weekend trading activities you saw today. So when you see the Dow down a little bit today, lots of volatility, but there's no real volume behind it. And it's just within the range. It's not really doing anything. This is actually just consolidation ahead of the weekend. The fact that you still have the uncertainty of the Syria issue and things like that, and bad jobs print and things like that. So all of that is expected. You'd see a little bit of a down day. People basically are not comfortable holding long positions or taking new long positions and in this environment, and therefore you don't see a rally on Friday. If you do see rallies on Friday, then that tells you the opposite. That tells you that people are confident on their long positions and things like that. So today's actually was no real surprise, and there's nothing really new here. It's down the long side here is what we're doing. What the blue arrow indicates here. We have a buy signal. We will stay that way. And keep my stop off this low here. We could still do a lot of different things next week, but I don't expect any massive move to the downside unless you get some reason, like maybe a Syria strike or something like that. But again, from what we're reading in the papers and stuff, you're really seeing a lot of loss of momentum in that concept of the strike of Syria. So again, I wouldn't be too worried about that right now. It doesn't mean I'm for it or against it. I'm just saying that's what the news is right now. And again, I'm looking for a test of this high here, the 50-period moving average, the price activity about 15,300 level. And that would be in line with the previous high point here, where we've seen a shoulder formation that actually took some time to form and come back down. And then we had this head formation, or it's a potential head formation. And we come back up, and then we come up here. And if we stall out at this level, that'll be the little telling signal that's going to be concerning. If we don't, if we consolidate and then move higher, that's fine. You stay bullish. But if it starts to roll over here, then we're going to get really bearish. Quick glance over in Europe. Look at the German DAX composite. You can see we've been bullish on this one as well. You have, again, the basic move that you're seeing in a lot of charts, Europe and U.S., speaking more of like the NASDAQ here in the U.S., you can see this kind of trading activity. When we come back down here, and whatever happens at this 50-period moving average is very important. If you start seeing hammer candlestick formations like this, then that's a good sign. It indicates buy pressure. Typically, you find support at that level before you bounce higher and test the high again, things like that. You have closed below it as well, but you didn't. You just sit there and watch it and wait for the right signals. You want to get that hammer candlestick with confirmation. It doesn't show up here. We bounce back above, back below. We get the signal again for the bullish condition. We get confirmation there, so we took that one. Tight stop right here. And so we're looking for this move to continue to go up here and test the previous high. However, because of this little ridge or resistance level that we have here, the move here isn't big. You wouldn't expect it to take off from here and just go up like this. You would expect it to just kind of stay in this range for a while until something else happens, until you actually close above this upper trend line. Until that happens, you're just going to expect a small move here. So don't be looking to marry any positions out here. A lot of charts are showing like this. That's why I'm so impressed, or I prefer the Dow Jones Industrial Average to a lot of the other U.S. market charts, because there's more volatility in it. They had the move up here, then they pulled back here and turned around at that point. So there's more potential in the Dow than there is for these smaller charts. But again, there are opportunities here. Quick glance at the India Bombay Stock Exchange. This one we covered in pretty good detail yesterday, talking about the two different possibilities that we're developing there and how you would know which one was which, and we got the answer today. We talked about this would be impossible, drawn out with the high points here, and the one that we had yesterday was there. This would give you that little uptrend line like so, and you could draw them off of the low points and give you this little situation like that. That was the bearish scenario, where if you were bearish, you would look at this saying, well, price activity is going to stay within this range and then drop out of it and go lower. That's not what happened. We told you if you broke above that, like you did here, closing above that, then in fact you would not be looking at that situation. You'd be looking at a bullish condition, which is what we're hoping for, because we're still long and we tighten the stop. But anyway, in this scenario, we're looking at this saying, okay, this is an inverse head and shoulders pattern. Now that we have the breakout, we would say that. And this is simply the first shoulder, the head formation, the second shoulder. We would draw a trend line off of the high close here and the high close here, the start and finish of the head formation. And that would be an uptrending situation like so, and that would be a more bullish condition for the inverse head and shoulders pattern. And it would simply, what we do, we measure the distance from this low point down here all the way up to the neckline, measure that out mathematically, and then take that number and add it to the breakout, and it tells you how high you expect price to go before you hit some kind of resistance. And so at that point you would start to tighten up a stop and things like that. So that's what that looks like. That's what you should be doing, staying long. At this point in time, you could actually turn around and pull back, and you could do that just fine, but there's nothing wrong with that. It's already indicated what it's doing. It's not a bearish condition like this where you had the rising wedge formation. This is a different pattern. It's telling you to look for a bullish perspective, so you'd stay that way until something started to break down. Right now, it's still bullish. One more thing I'd like to bring to your attention, maybe give you guys some homework. If you look at the India Bombay Stock Exchange and you scroll on down here, we get down right there, and you look at the MACD or the MACD, you can see that one of the things that took place when she reversed from the low points is this right here. You have this cross, right, the signal line. You can see that whenever you have this changeover, when you have the cross between the signal line, you get bearish, and when it crosses in the other direction, you get bullish. Okay, or in this particular case, you get bullish here and you get bearish right here, and then so forth. That was something that pays attention to, and it happened again and again on this chart, but you'll also find it setting up again and again on several other charts, and some of them are already further developed than others, but like in the US you have them just starting to cross, and so again that would be indicating a bullish condition by price. Now again, all this information, the MACD, whatever indicator you'd be using, is pulling or deriving their information from price activity. So if you're having a hard time reading price, sometimes looking at the indicators will give you a clue, and that's what I have for you there. Quick glance at the London Financial Times Index or the FTSE, same basic overall condition as the hopefully we're looking at the German DAX composite. So in this particular case here, same basic overall story. Look at this 6,700 level there as the resistance line. All you're doing really is just kind of moving sideways here. We started to do a little move in here, dip down a little bit. We found some weakness, we found support at the 50-period moving average, and started to bounce back off that. I'd look for a test at this level again. Not a big move, but there's some money to be made there. Okay, I could show you the Milan index, but it's really not important. Right now, looking at the NASDAQ, you get kind of basically the same theory, and you'll see basically that the NASDAQ looks a lot like European charts with no real pullback here. We just kind of consolidate at this level here, and I mean, we'd even take this on the long side. We don't like this chart at all because there's no pullback, there's no real opportunity. All there is a whole bunch of risk. And so when I'm looking at this chart, someone could look at this and say, well, we could break out, move higher, and do that. Well, you could, and the same could be argued for some other charts out there. But the problem with that is this guy right here. You have the ultimate oscillators jumped up there and tagged the 90 line. When that happens, any rally that happens thereafter, you look at the high close here, and then a rally goes here higher than you'd seen before. This right here looks like you're breaking out and rallying like people thought they were at that point in time, but right here you look at the current actual situation with the ultimate oscillator, lower high than you've seen over here. That will be the case on any time you try to rally because 90 is like pegged out. I mean, that's really way up there. So anything that rallies up there is going to give a bearish divergence. It's not going to be sustainable. It's going to fall back down again and again and again. So right now I would of course not be messing with this in any way, shape, or form. Here's a couple other charts in the US and other places that I have updated on the website with indicating that we see buy signals setting up. We're waiting for confirmation, of course, but they're set up for a reason, so you should be looking at them. And over the weekend, you can check them out on the website. The main thing to show you here, and I'm going to get some flack for this, but I'm going to show you right here. This is basically a hammer candlestick formation. Now, people are going to argue that's not a hammer candlestick formation. Okay, yeah, I get that. Perfect hammer candlestick formation is so rare, it rarely ever happens. What you're really looking for is a situation where the signal is the same, where you have volatility. Like you don't want to look something like this. You don't want to call that a hammer candlestick formation. Okay. Basically, you're looking for a situation where you have price activity drops down. Let me get the tools out here. Drops down, and then intraday it reverses and comes back up and closes high. If you have that, you know that bulls are stronger at that point than bears are. That's how it closes. Okay. Now you can have situations like this as well, where you have them close down. Come down, rally up a bit, and then close still down, but the wick is still there. It would still indicate buy pressure at this level right here. So if I were to get another day to come back and do the same thing, or some kind of a signal that would indicate that yes, indeed, this is a serious hammer. It's not just a situation that we're just temporary before we go lower. Then I would be looking at that as well. But a lot of you guys have been talking about, well, you're calling things hammers, aren't really hammers. Okay, this right here, you're right. I wouldn't call that a hammer, but it's still indicating the same thing. It's indicating there's buy pressure down here at this level. And what ended up being Well, there's buy pressure down there at that level. So this is something that you should learn to look for. Don't look for the exact perfect candlestick formation. They won't always happen that way. And sometimes they will, sometimes they won't, but most of the time they don't. Here's one that you look at that, you could say the same thing, hammer candlestick formation. And somebody's going to argue, no, it's not. It's got a wick out of the top. Yes, the overall concept is there. Okay, that's the point. Okay, let me get off my attitude problem there. Okay, now we're looking at the market here on the SPX, the S&P 500. If I would get some kind of signal confirmation closing above this high today, which puts you above the 50-period moving average, or a move intraday, then of course that would be a buy signal, tight stop, let it continue to rally. That would make a lot of sense there as well, and there's nothing more to do with this one. But this one I would take because there's enough volatility. Price activity is dipped down low enough to give me enough potential to the upside that it makes it worth my time. This little sideways moving stuff, don't look for buy signals there. There's just nothing to work with. If you've not been to the free website at PerfectStockAlertcom, well, there it is, and you can go right here under the markets section. You can find the market charts, my personal notated charts, 3-month as well as the 2-year weekly, updated nightly, and I will look at them again this weekend to make sure they're all current, and you can check them out again. And that's about it. Enjoy your weekend and be safe, and I'll see you all on Monday. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.